Hi, welcome back. Thanks for joining me on the Medicare Show. I'm your host and Medicare advisor, Jeffrey Kuhn. Today, on this episode, I'm going to tell a little bit of a story recently about IRMAA. If you know what IRMAA is, that means you're paying more for your Medicare standard premium of the 202.90 this year, and you're likely paying extra costs on your Part D plan. And I decided on these shows, I'm going to tell a little bit more stories about real life things that happen. And it's not just going to be Medicare based, but it's really geared towards seniors or people approaching Medicare or people, let's say 50 and above as you're planning towards retirement. I had a client recently, she came to me, and this is a client, I'm going to tell you a little bit of a background on her. She'd been a financial planning client for quite some time. I was introduced to her prior to her late husband passing away with some complicated issues, different properties, things like that. And she lives very frugally. And this client, she's in her late 70s and lives, again, she travels, lives extremely frugally. She's had a property that is a condo that is a rental property. It's been rented out for quite a long time. So as you can imagine, it's got a very low basis. There's been a lot of depreciation on it. And it's predominantly used as a rental. She does use it a couple weeks a year, upwards of a month a year. But this property had been earmarked because doing financial planning, we knew at some point in time her assets were going to run out, essentially. This was going to provide kind of the home run to get us to the finish line as far as what she needs and assets to maintain her lifestyle, to do the things that she wants to do. And there was going to be a point in time where we have to sell it. And there was going to be tax consequences. There was going to be capital gains. There was going to be depreciation recapture. And this was going to be a significant tax event. Well, it happened. This property was sold, and close to what I'd estimated, I go, just ballpark, be prepared. This is what you're going to owe in taxes. And that's pretty close to what happened. Well, and I said, in addition to this, to add insult to injury, you're going to get a notice because you're going to end up paying more for your Medicare premiums, and that's going to come out of your Social Security check, as well as you're going to pay a higher cost as a Part D adjustment as well because of this income in this year. Let me explain and share with you the impact. This is somebody that their gross Social Security check is literally just over $1,000, not $1,100. Just over $1,000. And normally they were taking out a Medicare premium. And with this IRMAA adjustment, and the letters came, and we knew once this was on the tax returns, it was going to hit. Her net check, and I'm not making this up, went down to $222 and change. That was her monthly income, sole income, right? Social Security. Now, she does have these assets, but these assets have to last. They got to pay her taxes on her condo she lives in, or owns, I should say, utilities, food, all those necessities have to come out of this pool of money. It's got to last. And now she's been reduced to $200 and some a month as her income. I mean, it's shocking. It's like the add insult to injury. And I said, let's look at when your taxes get filed. Once this is through, we've got your Social Security statement, and we're going to apply to a Medicare savings program, and we're going to see if we can eliminate your Medicare Part B premium. And as a result of that, this is going to clear up this IRMAA adjustment you have. I said, let's just try it, see what happens. I said, we got to provide proof of income, Social Security, utility bill, driver's license. I help her fill all the paperwork out here at my office. And we mailed it in. I go, just be prepared. We got to wait. Well, she was out of town and got back, and she's always like, Jeff, I got mail. Can I bring it down? I've got some things I want you to take a look at. And this has been part of our relationship over the decades. And she's always had this green folder for me, and I would go through it and say, keep this, purge this, get rid of it, and kind of help her go through some things and save this into your long-term storage for taxes. This goes to your accountant. And one of the things that she came into my office had her folder. And there were some other things I wanted to try to do. And once her tax returns were done for 2025 to help alleviate this, because now the taxes are completed. This transaction was not on her 25 taxes. It was back in 24. Well, she came in And lo and behold, I saw this letter from the county. And I go, oh my God. I go, this is what I've been waiting to get back. This is what I mailed in. That letter was the biggest relief I think both of us had, because she definitely was awarded her Medicare premium back, which means her check is going to go from $222 just north of $1,000, which is a huge relief for both her and me to a certain degree, because I felt really bad. I go, anybody that's getting $1,000 a month should not be having that much money taken out, with Medicare. So if you do get an IRMAA, a lot of people retiring, they get bonuses, there's things that happen. You want to be aware of it. You can go to SSA.gov. Social Security's got a great website, and it's very user-friendly. Treat it like Google. Go in there, Google IRMAA. And what you'll see is a table, your marginal brackets. If you make over a certain amount, this is what the additional charge is going to be onto your Medicare-based premium. These are conversations you should be having with your financial advisor, or your financial advisor should be having with me to help them manage your Medicare, because a lot of them just don't get into Medicare. It's very complicated, and it's just a whole nother area that they just don't want to expose them to. I get it. Have that conversation. Have the conversation with your tax advisor, whoever's doing your taxes. This is where I usually loop everybody in a quick call and say, let's talk about this so that we can all plan for our client the most efficient manner possible when it comes to IRMAA. Know what that trigger is. Know what the limit is. Because once you get it, it could be a lot of money you're getting hit with over the course of the year. That should be part of the basis of making sound financial decisions in your retirement or approaching retirement. How do you strategically manage it? I just did a podcast on Roth IRAs, contributions, conversions especially. Is something going to affect your taxes that could cause you to go over? Be aware of IRMAA. Go on to SSA.gov, read about it before you're on Medicare. Or if you're on Medicare and you're looking at selling something, there's ways to appeal it if there's been certain triggering events. But it's really important to understand this, and it should be part of your decision-making process before you do something that's going to cause a taxable event when you're on Medicare or leading up to Medicare. So hopefully you found that a little bit useful, something to be aware of. Think about it, because it is tax time. These are things you want to think about planning over the next year. Where are you going to fall? Are you going to be underneath it? Or all of a sudden you get a surprise and people all of a sudden realize my Social Security check just dropped a whole bunch of money. And why did this happen? And usually IRMAA is one of the first things that happen. For another group of people, it's a different podcast. They haven't been paying attention to their mail, and they didn't fill out the forms for Medicaid and their Medicare Part B premiums coming out. So you want to pay attention to these things. Hopefully you found this useful around tax time. I want to thank you for joining me. Please like and share this with somebody you know. Probably they're going to find this useful to some degree, and we've got some more upcoming things regarding taxes and Medicare planning and other things around assets for folks that are nearing Medicare age or on Medicare. So thanks again for joining me. Bye-bye.